Welcome to my channel. I'm the cover call guy, and my goal is to create $120,000 per year portfolio using only cover call ETFs. Right now, my portfolio yields about $72,000 a year, about $6,000 a month, almost $1,400 a week, and about $200 a day. Legal disclaimer before we start this video today: this content is for information and educational purposes only, and is not financial advice. I am not a licensed financial advisor or tax professional. All opinions are my own and may be incorrect. Trading and investing involve risk, including loss of principal. Please always do your own research and consult a licensed professional before making any financial decisions. Remember, I am just some random idiot you found online, and I could be completely wrong. Today, I want to talk about GX, GIAX. I don't know if I'm pronouncing it right, but it's some X funds. The reason I want to talk about it is because I have notification on for X funds because I'm interested in blocks, BLOX. So when I got my notification, I looked and I said, wow, they're actually changing this fund. They're trying to change their strategy and their holdings. So for those who have X funds or GX, GIAX, I don't know if I'm saying it right. I'm just saying GX. I said, okay, let me look what's new, right? And what really caught me off guard was, why are they changing the strategy and the holdings now? Why didn't they change it earlier? What are they doing? So we're gonna do a analysis of a GX. This is my deep dive. The question here is your capital safe in this 24% yield fund, right? The analysis is me, the cover call guy. Let's get to it. All right, the trigger. What was promised? All right, this post from X Fund started our my investigation, our investigation here. All right, let's look at the specific claim. All right, big changes are coming. So this is from their X post. I just copy and pasted. All right, so big changes are coming to the Nicholas Global Equity and Income ETF, GIAX. Changes include number one, call and put spreads on underlying holdings, invest in equity securities of individual companies across all market capitalizations. So I think they're trying to expand their global equity shares and their reach, and changing to weekly distribution. I think they used to be monthly. Now they're trying to change to weekly. And of course, guys, a fact check is required, right? Claim 1 and 2 represent a major strategy shift. Claim 3 needs to be verified against the bank account. Obviously, if you're not getting paid weekly, then they're not holding up the promise. So for claims 1 and 2 is what triggered my investigation into this. Because then, what are they doing with people's money this whole time? Were they just experimenting? And that made me question it. Like, what were you doing this whole time? Did you like, was the fund not performing well this entire time, and then you were just, you know, testing with people's money? We don't want that, right? We don't want that. That's kind of like yield max ish. Is I'm just paying you to experiment with my money. I could have done that myself, right? So that's what kind of triggered my suspicion, and yeah. So I did a deep dive into it and see what's new. They put out some stuff on their holdings and their strategy. So let's see if it's worth anything. All right, my quick peeks for you guys. The yield is 24%. I'm gonna say it's a red flag. It's manufacturer yield. They are handing you back your own money with 100% return on capital to hit this number. The NAV trend right now is down. It's bad, of course. All right, in a roaring bull market, SPY plus 70%. GIAX price is down. No good, no good. Right? Active betting isn't offsetting the bleeding. Holdings is very spicy. I'm gonna say it's kind of high risk. 55% active sleeve, which is speculative tech plus Mag 7 versus only 45% passive safety. My verdict right now, avoid it. Right now, for me, it's a pass. Unless you explicitly want to gamble on volatility with capped upside, hard pass for your serious income portfolio. What we'll be talking about in this video, right? The metamorphosis. My review confirms a fundamental shift, as they said. Confirmed. It's been fact checked. From a passive fund of funds to a core and explore architecture. The active sleeve is now majority, around 55% of the fund. The active sleeve, what is it? We see a mix of high risk speculative tech, right? NBIS, Iron, Hood, combined with heavy Mag 7 exposure, Meta, NVIDIA, Tesla to fuel the option strategy. However, the income in reality, the 24% yield is financed via significant return of capital. The weekly distribution narrative appears to be marketing aspiration versus reality. I think what they're trying to do is just say, look, psychological effect, come to us. We're gonna be paying weekly now. We see that the weekly trend is paying off, right? For example, Roundhill. Roundhill is pretty much it's kind of kicking ass right now, right? And they want to catch up and they want to compete. But there's no point of competing if you're not going to actually hold up the end of your bargain. So, for those who own it, let me know how it's been treating you. Chart one, we look at this first chart, NAV versus cumulative distribution. This just told you that I visualized the U trap for you as the fund pays out cash. Blue, the share price. Red declines, right? So then we're saying, oh, this is bad return of capital. Right, the interpretation basically you receive $3.90 in cash, but the principal value of your shares fell by about $2.31. While total return is positive, your principal is eroding. Destructive return of capital right there. Right, chart two is it income or your own money? Right, 100% return of capital, net investment income. Right, September 2025 health check. What I find was that it was a critical failure. 100% distribution of ROC. The fund generated 0% net investment income, which means you're giving them money just to hand it back to you. That's it. That's all it is. Not good. When I look at chart three, peer performance comparison, right? Year to date, global equity like VT, S&P 500 SPY, GIAX active option versus JEPI, a defensive option, right? GX lags the market significantly due to capped upside. You missed out on 8% gains versus global equity benchmarks. You would have just better off buying the actual index here, right? So not really holding up their end. All right, chart four, the active sleeve concentration. All right, we talked about this in previous is what their strategy is. This is new data that they just posted on X. This is just a copy and paste of what they're saying. Um, it just confirms that now GIX is now majority active sleeve, about 55%, and holds about speculative tech alongside Mag 7. So you can see here, they're trying to kind of go off on speculation here. All right, the mandate shift, regulatory of forensic behind what is actually happening, right? We have to actually look underneath the hood. Representative sampling, the original philosophy was a funds of fund, right? The old prospectus. Recent filing justify active security selection, stating the fund may invest in a representative sampling rather than just ETFs. All this means is that this allows them to hold crypto miners under the guise of global equity. So I don't know if this is just really a strategic point or just a cosmetic change. And then we have to talk about the multi-leg derivatives. The prospectus explicitly permits covered put spread strategies. Just means holdings confirm active put options. This confirms the manager is using the full toolkit to chase yield, adding directional risk to your portfolio. All right, portfolio deconstruction, right? The barbell is something I coined. It's not an actual financial term. We just look at it as a barbell, equal weight on both sides, right? If you have 10 pound on one side and 5 pounds on the other, it's gonna really mess up your workout, your wrist, your equal muscle gains. Right, number one, the passive core, which is the minority right here. The fund safety net is now less than half of the portfolio, around 45%. VEA, VOO, VOT, FRDM, VB, VUG versus the active slave, right, which is the majority now. The fund is now dominated by 14 active stock positions, about 55% of the weight, right? The Mag 7, and then speculative tech, and then distressed tech. This is high beta tech fund, right? So the stress is kind of like looking for their memes, and this is they're betting on these three or for whatever they hold to be shooting to the moon. Oh, it did not load. What's wrong with my picture again? Yikes. All right, the active sleeve, it's just a picture of the stock holdings, right? Updated weighings as of December 12th, 2025, confirmed significant bets on volatility. So it's just a graph of these three, right? MBS at almost 4.32%, right? It is emerging cloud play, high execution risk. IREN at 4%, Bitcoin miner serving as a proxy for crypto volatility, and Open 2.05%, distressed real estate tech. You're betting that it will turn around. Income quality audit, fact checking the tweet, right? We always gotta make sure they're not just BSing the BS, because they might just be doing that to get your money, and we don't want to be getting into another yield max situation. The claim 3, right? Weekly distribution. The tweet claimed weekly payouts. However, 2025 payouts tell a different story, right? So, of course, this claim right now, it is false until it's actually paid out. But I just put it here to say, hey, it's not weekly yet. Okay, let's understand that. I'm just saying they're claiming to be giving weekly, and I think starting December, one of the weeks in December, but it's still monthly until we actually get that weekly payout. So don't leave in the comments saying, oh, you're an idiot, it's still monthly. Yes, I know it's still monthly. The yield trap evidence, 100% rock distribution as of September 2025 implies the fund generated zero net taxable income. The fund is effectively returning your principal to maintain the 24% headline yield. This is destructive rock. This is my opinion, of course, of destructive rock. You might have a different view, point of view. You might have a different definition, but in terms of the yield trap, this is it. This is kind of, for me, kind of viewing it like a yield max scenario here. Unless they can actually get some positive profits, then I'm gonna say right now, staying away. My final verdict, I'm gonna say avoid if you see capital preservation, qualified dividends, or low cost global exposure. Right, the 100% rock distribution and shrinking NAB are red flags for me. Right, for your long term compounding. If you're a risk taker, you can allocate tactical only if you desire exposure to high beta tech, right? Mag 7 plus speculative tech, but want to monetize volatility. Treat this as an alternative, please. Not a core equity. I did a video on the 3 different sections, right? Core satellite, and satellite. This would be a satellite, right? This would be, hey, look, I just want to gamble some money. I got some money left over. Let me put 1,000, 5,000, 10,000, and let's just see how this performs and see how it rides up. Because right now, until they can actually execute the strategy for the next 3 months or so, going into the new year of 2026, I wouldn't really. I mean, it's not on my watch list. The only reason I know about this is because I have X Funds notification on for blocks. I'm really starting to like blocks. So this popped up, and it just caught my eye why they're changing the strategy now. It's just not necessarily a bad thing, because if they know that their strategy isn't working and they switch, that's essentially is a good thing. That is a good thing. I'm not trashing it here. It's just, for how long have they been trying to figure this out? Playing with other people's money is what kind of ticked me off. If you're a long-term believer and holder on X funds, this is a good thing. All right, I'm not here to trash this ETF. What I'm just saying is, what started this whole video was, what the heck were they doing this whole time, right? Like, you were just losing people's money. Like, did you not realize that it wasn't gonna work? So this is my take. This is my opinion. If you hold it, let me know how it's been treating you. If you plan to hold it, sell it, dollar cost average. If you were thinking about holding it, do you like the new strategy? Do you like the new holdings? Do you like that they're changing from monthly to weekly now? Give me your thoughts. Of course, this is just my primary source that I got from making this video here. I want to start adding like sources, so perspectives, and put spread definition, to turnover rate. Thanks for watching. Don't forget to do your own due diligence. Okay, again, this is my opinion. This is from my research. Please subscribe, like, comment, let me know. And of course, the risk profile summary of GIAX right now, I'm gonna say, is a little too extreme for me. So, not in my watch list at all. Maybe in yours. Let me know if you plan on buying it, selling it, holding it, dollar cost average. Catch you guys on the next. Stay tuned.